Good evening, everybody. Let's see. Still getting quite a few questions about the private training sessions that you don't have to bring anything. Some people bring their laptop so that they can do their own trades while they're up there, but you'll be well fed. We don't even leave the house most of the time until we go out and get something to eat. Bring your own toothbrush, that's true. And so the first day is just starting from zero, meaning we start with the doji. We go through the 12 major signals, and then we do all the patterns. Then we do stop losses, entry and exit strategies, quantifying which signals and patterns work the best, how to use trend analysis. Go a little bit, I say a little bit because it doesn't take a whole lot, to go into how you use your own money management. So in my case, I had to, just to keep my own emotions out of my trading, which was my biggest faux pas. And then the final day, we kind of walk through putting all that together and how we scan and what to look for, how we cultivate down to where we got the best 1, 2, or 3 trades ready for the next day. So, and somebody was asking, saying, well, I have my problems with my own trading. Can we work on that? That's exactly what this is for, is to kind of narrow in or go specifically into why the signals work and what that they're putting everything in, or the probabilities of the same type of patterns working over and over. And then how to get your own emotions out of the trade, or whatever investment flaws you have, whether you can't pull the trigger or you pull the trigger too often. We go through all that. MP, we may have another one later this year, yes. So anyways. All right, and that's the view out the windows as we're working on the screens. We usually go out on the docks and kind of splash around in the water when we need to. So, all right. Hold on for 1 second. I've got a contact lens that's just bugging the doo-doo out of me today. Let me take this out. Okay. I get some sort of allergic reaction every year about this time of year. It just makes wearing contact lenses impossible. Sometimes I'd like to blast them out of my eye. Okay. So we can see, or kind of still analyze, what this market is telling us, except it's now telling us at least we're in a positive direction. We've had this sideways motion for the last few months, and we were at the bottom of the trend channel. Down here, things look bleak once again, but then we saw our big morning star signal, followed a few days later by a bullish engulfing signal, right at the same level, and kind of at the support level. It was really confirmed when it did a doji at the T-line, and then the doji sandwich taking you up off the T-line up through the 50-day moving average. So today's trading was just more confirmation that the bulls had taken control back down here. And so we can make some assumptions. Where's our next likely target? Probably back up to the top of the trend channel. That means this is be a long uptrend? No, it means that over the next 3, 4, 5 trading days, we should be in an uptrend, and so we trade accordingly. And then once it gets back up to the top of the trend channel, then we can take a look and see what happens at that level to see whether they're going to finally break through. Now, the reason we suspect there's more upside is look what the NASDAQ is doing. The NASDAQ also has been in this slow upward channel, but now when it bounced off the 50, it did a doji sandwich that broke it out into new territory. So I would suspect right now the next target for the NASDAQ, I hate that thing, is up here. Again, kind of demonstrating that we probably still have a few more days to the upside before it runs into a major resistance level. Let's see. The S&P 500, kind of the same scenario, had the doji sandwich. Transportation index, also had this big bottom or basing down here, a triple bottom, and staying up above the T-line. Where's the next likely target? Up here at the 50, which is where this downtrending channel is coming to. So just kind of gives us a little visual running start to say, yeah, there's more than likely going to be a few more days to the upside. Is it going to go straight up? Well, as we can see what these markets have done over the past month, the past 3 months, it's up, down, up, down, up, down. And we're in that same mode right now. Up, back down, back up today. I mean, there's just no real consensus. But right now, all we can see is that we're in an uptrend as long as we stay above the T-line. Crude oil has gotten itself into kind of a sideways mode here. Notice the wedge formation. Make it a little bit smaller. When not trading it right now because there's really no direction to it, but watching to see whether it breaks through this resistance or comes back down through this support level. Interest rates, 10-year bonds, still in this choppy, slow downward mode, which means they could be taking this back down to the lower end of the channel. These rates are still rising a little bit. And I say a little bit because the rates are so low right now that any move isn't going to be that significant. We went long in soybeans today, basically because you had the little J-hook pattern, and more than likely they're coming up here to test the 200-day moving average. If it breaks through that level, should be some good running room, at least back up to test this level. So we're staying long as this stays up above the T-line. Also started going long on live cattle because you can see the trend channel here. You can see the bullish harami pretty much telling us the selling had stopped. And where did it do it? Right smack dab on the 200-day moving average. Where's our next likely target? The top of the channel. Went short in lean hogs. As you can see, there was a dumpling top. They came up, did a bearish J-hook pattern, and gapped it down today through the support level. So still looking for maybe this type of move to the downside. And what else we got? Oh, the dollar has been drifting back down here recently. You can see the downward trend channel. popped up a little bit today, but as long as it doesn't get back up above the T-line, you got to consider the dollar in a downtrend, and the euro very slow, very sluggish, but as long as it stays above the T-line, you're in an uptrend. Okay, so if one of the sessions we do at the lake is trend analysis. And why is trend analysis important? Because if we can see what the market is actually telling us, in this case, it's still moving sideways, but right now the very short-term trading is probably moving positive. Again, back up to the top of the trend channel. So that makes it important whether you're day trading or swing trading, which direction you want to be in. And again, this is all just a process of putting everything in alignment. That if I was day trading something tomorrow, I'd be looking for something that has a potential of the upside, because that's essentially what the overall market is telling us. So, and we'll get into a lot of the patterns that are working well, because there really isn't any massive selling and there really isn't any massive buying, so the patterns work well. Oh, poor crop in Texas. Yeah, I know that Texas has had a lot of dry spell. And wheat right now, more than likely, it's coming back up to test the 200-day moving average. So anyways, okay, that's wheat. Whoops. Corn is popping back up, but you still have to watch to see what it does at the 50. Because obviously it's been in a downtrend for the last 6 months. And the reason for that is right now the weather conditions for corn, wheat, soybeans, all of them have been pretty good. They've been getting good rains and good sunny weather. So there's really nothing out there that's slowing down the planting of crops. All right, some of the stocks that we've been watching. We've been in SRNE. We closed it out the other day, but this is where, when you see them popping it back up, that's why I announced first thing this morning in the room that there was the best friend signal on SRNE. You want to be buying, because what was it telling us? It's telling us they weren't going to close or stay below the T-line. Eyes, same scenario. As long as this stays above the T-line, notice your best friend signal. You just want to stay long on this one. And MX. As long as it stays above the T-line. Notice the fry pan bottom, tight or slow curve. And then they really couldn't close it below the T-line. Let's make this even bigger yet. I would suspect now your next move should be back up to the top of the channel. So you can pretty much draw a parallel line through the bottom of the top. And if we can see that, everybody and their brother can see that. We just happen to know when they're stopping the downtrend or starting the uptrend. So it helps us with ultimate timing as far as getting into a position. Whoops. Nuvo. There's a nice J-hook. There's your classic. Fry pan bottom, J-hook pattern. Wave 1, wave 3 should be the same magnitude. That's why we were recommending it today. And what do we expect coming out of a fry pan bottom? A very strong price move. But on the other hand, there's going to be times when you want to take profits. And that's essentially what happened today coming out of this pattern. Anytime you see a move like this, I mean, I think I was buying calls somewhere down in here as it broke out. So what do we want to do with this type of position? Well, what's our first best friend signal? I'll get back to that, Glenn. Um, so what made this a potential for taking profits today, even though it was coming out of the fry pan bottom, doing what it's supposed to, a big price move? Very simple. Our simple rule is that the further away it moves from the T line, the higher the probability it's going to come back and test it. So all of a sudden, when they're blowing this out up at the top, look how far away we are from the T line. What's the prospects? They could come back and test it. So that's exactly the reason why I go to my 10-minute chart. And this one said, up. If they are starting to sell this off, instead of doing a J-hook, it's time to get out. So we closed out the trade right about in here, which means essentially we were closing it out somewhere right up in this range. So we got most of our profits off that one. Okay, so I'll go back to which one did we just do that had the best friend? That's just to find how to do. Oh, was that eyes? Eyes had the best friend. And a best friend is when you see that doji in the oversold condition and they gap it up, especially if they gap it up through the T line. So that, remember what a doji represents, indecision between the bulls and the bears. Then the gap up tells you that that's the decision they made. So that's your best friend. And as we go through our quantified patterns, which ones work the best friend is usually the top one, because not only does it work to show you there's been a good up move, but usually that up move is fairly substantial, number one. And number two, these occur quite often. So the frequency of these type patterns and signals are there for us. Why go to the 10-minute, not the 5-minute or other time frame? Because usually my 10-minute is my bellwether, because that tells me sometimes and that just seems to work better as a bellwether. So if I see this and I start seeing it selling off, then I can easily just go to my 5-minute chart. Say, what's my 5-minute chart doing? Well, it's coming back down here, and if it closes below the T line, maybe I'll move a little bit quicker, because where am I in the first place? I'm way far away from the T line. So if I'm buying and selling, I use the 10-minute as my bellwether, and then I'll click to the other ones, shorter ones, to see if that's confirming the 10-minute chart. And that's nothing set in stone. It all depends on what your risk factor is. I just have found through the years that the 10-minute chart seems to be a pretty good gauge of when there's been a major change of investor sentiment versus the 5 or the 1 or the 3-minute might just be bobbing around, but it doesn't really confirm until the 10-minute confirms anything. How about using the 3T? Yeah, I didn't, but that in today's case, where I actually had the calls and I had huge profits and the stock was up, 34% or some huge number. Yeah, I was going to take some off the table. Yes, if I see, I can do one of two things, which I wasn't quick enough to do today, because by the time I saw that it was up huge, it already made this move. So now I was waiting to see whether they were going to hold. So theoretically, I should have sold half of it here, because I've discovered that if you have a very strong price move, when the first selling starts to occur and you're that far away from the T line, take some profits. The worst case scenario is you can always buy it back if it's supported at the T line. Yeah. So I use the 10-minute as my bellwether, and then I can use my 5-minute and my 1-minute to get a much. Or this is the 1-minute to get a much more clear picture of what's happening. So anyways, that's That's all part of the process of that candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. Would you short for the turnaround? No. Usually, because I don't know whether when they came up here, I mean, something was showing some strength or great strength. I didn't know what it was, so I didn't want to be shorting and then them turning it right around and head back up at a strong move. I would rather be shorting something that had been showing weakness and was confirming than trying to second guess what's happening out there with this one. Gary, no. I will trade the first hour. There's the old saying that says amateurs trade the first hour, the pros after the first hour. But I don't care who's buying or selling, whether it's somebody's grandmother or a professional. If that stock price is going up and it's going to go up during the first hour, I'm jumping in as soon as I'm buying the signals, not what everybody thinks people should be doing or who's buying or who's selling. Okay, let's see. So something like this, HQY, that's kind of, it didn't move very much, so there's a difference here. If this had moved from here all the way up here, yes, that had moved a good distance. The fact that they gapped it up, they weren't moving it very much, or they definitely weren't moving it back down from where they opened it. But it would still give an alert. At this point, if I own this, what should I expect? If I'm staying long, I expect a 45 degree. If it comes back down through today's open, that tells me there's profit taken. More than likely, they're going to come back down to the T-line. All right, what else do we have? Oh, HZNP has been acting well. I say acting well because we can see the patterns. That fry pan bottom, and where did this gap up? Right through this resistance level. Very simple on this one. You just stay long until you see a sell signal and a close back below the T-line. We recommended DYAX this morning. That same reason, that if they open this positive, doing a doji sandwich setup, first of all, they're telling us the 50's not going to be tested again. And second, if they moved it higher, they were breaking out through this level. So we want to stay long on this one because basically we got a wave 1, wave 2, fry pan bottom going into wave 3. We just stay long until we see a sell signal. Whoops. MTSI, very obvious, a J-hook pattern. So if you were buying today, that's all right. But now we got even a more compelling setup. Remember, if they open up positive, they're going to move it in the direction of how they open it after a doji, which means if they start trading positive, they're breaking out through this level, more than likely the same magnitude as this, doing a doji sandwich, means we're now in wave 3. So there's our wave 1, wave 3 going to be the same. Could you look at AMC? Okay. Glenn, usually the middle part of the day. Carlos, I'll get to AMCN here in a little bit. Usually the middle part of the day. I don't do too much buying because usually the middle part of the day is when they, after a big move in the morning, they'll pull it back. And you can see what type of pullback it is based upon the type of signals it's doing, essentially on the 10-minute chart. So if they're selling it off hard, obviously you're going to get some big black candles. If they're just kind of consolidating, you're going to get a lot of dojis, hammers, spinning tops, that sort of thing. So I usually after about the first hour of the day, that's usually when most of the moves are already done. And a lot of times, if I'm trading at that point, I'm usually taking some profits from the first hour. Not to say that I'm staying out of that position, but if it's starting to consolidate back, I'll just look at my 10-minute chart and see when the selling is over and when the buying starts back in. And I was trying to think if there was... Oh, we're going to be looking at this one anyways. Cyber was a good example of that. When it backed off to the T-line area, it had two things could have gone on. Could have stayed down here and given you kind of a confirmed bear signal, or they were going to bounce it off the T-line. Well, a lot of people say, well, should we sell out here? Well, it's already there during the early part of the day. We already know the stochastics are heading up. We're already broken out. We've had a kind of a doji sandwich. More than likely, this was just a consolidation day. I say more than likely because everything else indicates there's buying going on. It just happened to be a selling day. So to confirm that, again, we flip to the 10-minute chart, and we can see on the 10-minute chart there was kind of a cradle pattern down here. And then once they started taking it back up, it did everything. This could be a 1-minute chart. This is a 10-minute chart. It could be a daily chart. It could be a monthly chart. But it's doing the typical on the 10-minute like on any other chart. Came up, hit the resistance level at the 200, pulled back to the T-line, and then came right back up through, doing a J-hook pattern on the 10-minute chart. Want to be that you can have a bearish J-hook pattern, which is one of the reasons we shorted lean hogs, because on the daily chart it kind of had a bearish J-hook pattern. Should be some more downside. J-hooks, are they good if the stock is in a downtrend? Well, a J-hook has a prerequisite to it. What was our J-hooks today? The prerequisite is it's had a very strong price move. And that's why this is called the classic, because what do we expect coming out of a fry pan bottom? A very strong price move. And we can watch to see how it pulls back. In this case, we see it pull back. Where did it stop? Right smack dab on the T-line and start back up. So we can consider that a good J-hook pattern as long as now it stays above the T-line. So, no, a J-hook pattern has to have this strong price move as a prerequisite. What was that we were working on? No. MTSI was the same scenario, or did we just do that? I can't remember what we just typed in there. Oh, we did Nubo. There's your J-hook pattern. Makes this very simple. If this opens positive tomorrow, they're breaking it out. Wave 1 and Wave 3 in progress. Let's see. We've been holding on GIMO, and this is why the T-line has helped me so much through the years. Oh, I don't know what that is. That's IMO. Here's our little J-hook pattern. How long do we hold on to this? As long as they can't close this back below the T-line. We can see there's a little resistance level. Makes this very simple. We've got kind of a hanging man. We're in the overbought area. So we know what this should do to continue the uptrend. It needs to trade flat. It shouldn't trade back below the T-line. If it does, now it's confirming the hanging man, and it's time to get out of that position, which was something like Momo, where the doji, with it closing back below the T-line, told us to get out because now what was the pattern? Well, the J-hook type pattern disappeared. Told us the resistance level was still acting as resistance, and it's not moving in the right direction. Close it out. Move on to something else. Oh, let's see. We bought GIMO, I think. I think we were buying right in here after the initial gap up, because what do we expect after that big price move? There's your doji gap up. We expect an uptrend, and we call this your 45 degree, which basically you stay long as it doesn't close below the T line. And SRPT, kind of the same scenario. Bought right in here. It was the next day there was profit taking, and then when they opened up positive after a Harami, what's that telling you? It tells you the selling is done. And so what's our criteria for holding on to this, even though it got a little bit soggy? As long as it doesn't close below the T line, you're in a 45 degree. XNet. There's kind of our Morningstar J-hook. If it opens positive the next day, what's it telling us? It's telling us this level, they're breaking out through that level. We're just staying long on this one until we see a sell signal. XON, coming out of this big fry pan bottom. Very simple. We stay long until we see a sell signal. And Yodi, YDLE, had that big belt hold type signal. So if it had opened lower today, we'd have closed it out. It opened positive and kind of traded like this, which tells us this uptrend is still in progress. We'll still use the T-line as your stop. As a swing trader, are the two main points to look at the chart 1 hour during the open and 30 minutes before the close, or are you sitting down in front of the charts the whole day? I'm not sitting here intentionally watching the trades just because I've got so much going on. I'm usually here at the screen. But I'm usually going to make probably 80% of my decisions for buying and selling occur within the first hour of trading, because that's essentially going to be the time frame where a chart tells me that the bullish chart is being, or the bullish signal is being confirmed or not, or a sell signal is being confirmed. Probably about 15% of my trading decisions are based on the final 30 minutes, and most of the time that's closing out a position that doesn't look like it's going to stay above the T-line. And then about 5% of the time, I'm trading in the middle part of the day, basically because something major has happened. And something like PGNX today, with it up huge, I immediately started watching to see when the selling, and that wasn't during the first hour. That was more to the middle part of the day. What is expected when in a 45 degree is just a steady uptrend until you see a sell signal and a close back below the T-line. Where are you tempted to sell GIMO around the 26th of the month since it dropped? Yes, there would be times where you could sell it here. So you have two things to look at. Is the selling very compelling, pardon the poetry, but notice when I pulled back to the T-line, it wasn't very compelling selling. So the worst case scenario is if you sold it, and then you could see what it was doing, kind of a little mini scoop pattern, you're buying back. So quite often, if there's an uptrend, I may be out of a position and back in a position. I would rather give up some potential profit than hold on to something that has a bigger potential loss to it. Let's see. Let's see, is that where, oh, that was GIMO. On what date? 6/19. Oh, I think we re-recommended it coming out of this this area. I don't think we recommended this late. I know we've been holding on to it for quite a while. Sometimes you'll get a re-recommendation based upon the pattern still confirming. The stock has been on a 45 degree for more than 2 weeks. How do you decide if you should get in or not? Usually I don't get in. A 45 degree is something that's going to be moving. This is the area that you decide whether you get in or not. This is now deciding to stay long and continuing to hold. Kiwi, we recommended that one today, but it really didn't do anything of any great magnitude. But it can still be bought. Notice the doji kind of cradle type pattern. It's still going to be bought on strength because it has broken this downtrending channel, making wave 3 viable. So we did Kiwi, Cyber, BV we've been holding on to. It had a couple scary days down here. And this is a case where some of the people they held on to it, mainly because they were watching the 50. The next day came right back up. So this would have been the case if you closed it out here, you're still buying it back here because what was it telling you? But they weren't going to close it below the 50 and or the T-line now. And so we stay long on this one until we see a sell signal. If there is a red candle and then a doji, would it still qualify as a doji sandwich set up like the Qs? No. That is a flutter kicker setup. Remember, a doji sandwich is we have a bullish candle, then a doji, and what's our simple rule of a doji? It's going to move in the direction how they open it the next day. So they opened it positive with the anticipation of the same magnitude move as this day. That's your doji sandwich. However, if you have a bearish candle and they gap it up at or above the previous day's open, we still have a doji. What's our simple doji rule? It's going to move in the direction how they open as after doji. So if they open this positive and start going positive, we've got a flutter kicker, which means if we took this little flutter out of here, we essentially have a kicker signal, which tells us we've got a very strong uptrend in progress. Let's see, we did Momo. All right, a few others that Pixelworks was, I had this a couple of days ago. This one you still watch. If it comes back up through today's open, you got that J-hook pattern again. The J-hook needs a prerequisite, which is that very strong price move. And ADHD, notice when it pulled back, that was time to take profits over here. But if you held on to it, you didn't close it unless it closed below the T-line, which it did just barely over here, but it was indecisive trading days. And if you cut the chart off right there, what does it look like it's trying to set up? Looks like it's trying to set up a J-hook pattern. Let's see. And we did Nouveau. AKBA was something that was thrown around in the chat room today. There's that slow curve. There's your kicker signal. Opened here and closed here. Then they gapped it up and went this way. That's a very strong, strong chart. So this stock was up a good percentage today. But knowing what the candlestick signals are telling you, that kind of alleviates that fear of getting into a stock that's traded up big based upon knowing what the pattern and the signals are telling you. So remember, the bigger the signal, the more compelling there's been a change of investor sentiment that you're probably going to have an uptrend after this. No, and somebody was asking today whether we would be looking at charts in the training session, and the sad answer is you're going to look at so many charts that the signals and patterns are going to kind of be burnt into your memory banks. So that's all we do, because that's all candlestick analysis is the analysis of the patterns. So we look at hundreds and hundreds of charts. There's a little scoop type pattern setting up. There's your bullish Harami. This is in CTSO. And what do we expect coming out of a scoop pattern? That slingshot effect. So if I was picking a target, I'd probably say they could bring it all the way back up here, test that level. When would you buy vertical credit spreads if they are safer for capital preservation when using? Then are they safer? That's a whole different discussion. But if I'm buying calls, it's usually somewhere around 3 weeks or longer before expiration. If I'm doing a debit spread, it's usually around 2 to 3 weeks, somewhere in that range before expiration. I don't want to be too far out in front of a price move before expiration, because if it starts moving up big, both of those calls are going to move, and usually it's going to be the higher one that I sold that's going to move percentage-wise faster, because that's the one everybody usually likes to play in the money or just out of the money call situations. So I usually do the credit spreads. Let's see, I hope I said that right, that I did debit spreads 2 to 3 weeks out. And usually I do the credit spreads about 1 week prior to expiration, because I want them to expire worthless so that all the money that I put in my pocket as a credit stays there. And obviously the less time there is for prices to move around dramatically, the better off. So credit spreads are very effective using candlestick signals, because we have a good idea which way a price is moving. And if there's only 1 week before expiration and it looks like that stock's still trading positive, we can sell a put spread with a higher degree of probability that we're going to make some money. It's not a big profit maker, but it's a very, very consistent profit maker. A very high probability you're going to make money with a credit spread. Let's see. And what did I just do? MCF. It's a big fry pan bottom. Something you can start keeping an eye on. The fry pan bottoms are just good, high probability trade setups. Uh-oh. How can I screw up that easily? Well, shuzbus. For example, there's our fry pan bottom coming out of PRTA. Good strong price move, and then there's our classic J-hook pattern. Notice when it pulled back, it did so very indecisively. So if this is wave 1, wave 3 should have another couple points to it. And the reason that the patterns are so effective, and you want to learn, usually I want to enter a fry pan bottom just as it's about ready to break out, because we know what the return is going to be. This is an ANAC. No wonder I couldn't. The big price move is usually going to be when they do break it out. So I'd rather be buying it here knowing that they broke out versus buying it in here not knowing whether they're going to get up through or not, and it's going to take it a while with very slow moving. Oh, yeah, I guess. Where's your breakout? Right here. You can see where this fry pan bottom started. You can see that it's broke out today. RGEN. Notice how this one started this fry pan bottom. It's continuing because we have a doji sandwich above the T-line. We at least know that our target is here, and once it gets here, we'll watch to see if it breaks through or not. Let's see. NLNK. There's your fry pan bottom or slow curve, and they popped it up through the 50. So you got the slow curve breakout of the 50, just barely, makes it very simple. If they open this positive tomorrow, what's it telling us? It's telling us a slow curve breakout is in progress. It's telling us the 50 is not acting as resistance anymore. And it's telling us this downtrend is not acting as resistance anymore. Usually you get a very strong pop from here. On Apple, whoops. Right now, I'm not trading Apple at all. Let's get all these. I don't know why all those lines are on there. But you can see what direction. Oh, Rashal, what's happening here? You can see which direction this is moving. Pretty much sideways. Right now, I wouldn't do anything with this until it breaks this downtrending channel. So if you were doing something on Apple, which usually has these big, huge price moves after earnings, I'd buy something way out of the money, either on the call side or the put side. One way or the other, the price is going to move big, and if nothing drastic happens, you don't have very much money at risk. Is there a way to identify a breakout versus a fake out? Usually if you see a fry pan bottom or any other pattern and it breaks out, it's not because it's faking you out, it's because that's what the pattern is supposed to be doing. Is closing below a T-line is a fake out? It could be, but if you've got something that, I forget which one it was it Gimmo? If you've got something that's already told you what it's doing, that it's supporting at the T-line, and it closed and is trading very indecisively below it, you wait for something decisive one way or the other. So if I was buying on this day, or if I was holding, I definitely wouldn't want to see another bearish candle because that would tell me the downtrending channel is in progress versus the breakout. Okay, Carlos, we'll do that one right now. What kind of doji was last Friday's? That was a gap up with a potential of a flutter kicker, which needed to see bullish confirmation today, which it didn't do. So right now, I wouldn't be trading this one at all, just because there's no pattern there. There's a potential of a kicker signal. So if I was going to buy this one, I'd put a buy stop right here, just above the moving averages, because if they came positive from there, now you've got a flutter kicker signal set up, and it's telling you they're buying based on the fact that they're up above the T-line again. Oh, let's see. Oh, I was doing the fry pans. That's why we recommended DYAX on a positive open today, because that would be your doji sandwich fry pan bottom confirmation. I'd still be buying this one with the anticipation that if this is wave 1, wave 3 should take you up in about the $38 area. The LDR, we didn't really go into this one today because it didn't show a lot of breakout, but it did a doji, so we can still be buying this one on positive trading because that'd be still confirming the fry pan bottom. Oh, AMCN is going private? Okay. And ZOO, this is what gets you back out of this. If this is a fry pan bottom, which way should it be going? It should be going this way. It shouldn't be closing back below the T-line. So you had indecisive trading, even though you were still in this fry pan bottom. But the fact that they closed it here on the T-line told you one thing. It had to open positive and trade positive. The fact that they closed it below the T-line would tell me that this trajectory is gone. Now we're back into a sideways mode. I want to be out of that trade. And let's see, we did the classic, but I think Posen was kind of your classic. There's your strong price move. There's your J-hook, continuing pattern. A couple more, and then we'll start taking individual stocks. V-Built. Keeping an eye on this one, because there's kind of your Morningstar type signal, which means if they break through this downtrending channel, there's a good possibility they come up and test this level, and if it got real rambunctious, they'd come back up and test the top of the trend channel. Yeah, let me get to that in a minute. I'll answer your question. Let me finish up a couple more on a market crash. Blue also has this little cradle type pattern down here after a strong price move. If it starts trading positive, breaking this downward trend channel after this cradle pattern, that tells you you're in wave 3. Probably have more upside. Oh, CALD. This was that scoop pattern. This is what we expect coming out of a scoop. Notice how flat the handle is, then all of a sudden it scoops. You get a slingshot effect. FMI. Got that flat handle. Now you've got the potential of a slingshot effect. And FLML. There's that little scoop. More than likely, they're going to take this up, back up to this trend channel, and then do a 45 degree off of there. And AMBA. AMBA was a good example of when you see that sell signal, if you did take some profits after a strong sell signal, like a big bearish engulfing signal, there's only one thing you could do. It needed to open positive and trade positive to stay above the T line. The fact that they gapped it down told you get out of it immediately. The worst case scenario is the odds were against you. Worst case scenario would be that they opened it lower and brought it back up above the T line, which told you the T line was still not being breached. You could always buy it back. William, remember, you got to remember that in the 1929 crash, the market had been heading down ever since August. So it wasn't like that day that it crashed, it was a surprise. More than likely, that was the panic selling at the bottom, or based on that the downtrend had been in progress. I think it was in 2001 when the market reversed. There was a few days prior to that where you started getting sell signals and it started selling off. So most of the time, I say most of the time, unless there's a world event that sends everybody out of the markets, usually you can see when that when the selling has started to come in, and that's essentially what the effectiveness of candlestick signals tells you, is when there has been a change of investor sentiment based upon the signals it creates. How do you determine which strike price? Based on, again, that's a whole different conversation. Essentially, I go after the ones that make the most sense math-wise. And we'll go through an evening of that. But a lot of people say, well, I'm trying to find a situation for doing my iron condors or my spreads. To me, that's backwards. I would rather find the best trade and then apply the correct option strategy to that trade. Okay, I think I've gotten all of it. So with that, Is there any more general questions on candlesticks? Okay, and also remember, still trying to answer some of the questions I get from private messages on the training at Keuka Lake. You're going to see, when we go up there, you're going to see, again, everything you've probably seen at least once through these chat sessions. But the difference is going to be that we're going into each one and dissecting them and explaining the rationale of why they work with those confirming indicators. And another great benefit that the Japanese rice traders provided for us was they also told us what was the psychology or the sentiment that created those signals. So once you can identify the signals and patterns, and you've got it in your head what was the investor sentiment that created those signals and patterns, you pretty well have the same grasp as far as what makes prices move as somebody that's been out there trading for 40 or 50 years. Yeah, more than likely AMBA's coming back to at least test the 50, and you just have to see what it does when it gets there. Do you see volume behind a breakout? Normally, but that's not a prerequisite. You don't need to see volume because prices do not move. You're buying price, not volume. Volume is just kind of a confirming indicator that there's been a strong change of investor sentiment at that price or at that particular candle. Yeah, hold on to your individual ones until I tell Jim to do the double line. MP, yes, we'll do that on an option night. Market had turned down before the 87 crash. Yes. And so that's, so this is not rocket science. This is just the accumulative knowledge of everybody buying and selling. And usually somebody is starting to sell before a big crash for whatever reason. For example, I think even in 9/11, the market had already started selling off a couple of days prior to that. So we'd already gone short, not because we were expecting anything like 9/11, but it was telling us that the sellers are starting to step in. It was time to be short at that time, and the 9/11 thing just added to it. Actually, do you have any detailed scanning material on your site? Suggestions for in-depth education? Don, we just have the ones kind of what we did the other night on scanning. There should be some videos taking you through it a little bit slower and a little bit more in detail. So if you go to the candlestickforum.com site, go up to products and services, you'll find 40 or 50 training videos in that area. You went too fast for me on the put spread. Oh, that sometimes the price will move well enough that if you do a put spread, the amount of money you put into it, the net amount, you're still going to make a good return off of that. However, there's some times where the upside potential isn't that great and you're getting near expiration. Sometimes it's better to sell a put spread. That's a bullish trade when you're selling a put spread, not buying a put spread, but selling a put spread, anticipating the prices to go up further. That's usually that's the time where you sell put spreads, because that premium that you put, probably a higher percentage return than if you try to buy the call spread and have it move up past the price that you paid for the call spread plus make that percentage return for you. I hope I described that semi-clear. Yes. If I see, there's a lot of times I will still buy the options on a, now if I look at a stock, and which one did I look at today? I looked at something today, but they were bidding 20 cents. They were asking $1.80. So that immediately gives you the impression that there isn't very much options being traded in that stock. So you make a decision, either just buy the stock or move on to something where just because there's options out there on a stock doesn't necessarily mean the math is going to make it worthwhile for the risk reward of that trade. PRTA is high. I don't understand that statement. Now, there was the breakout of the fry pan bottom, or there was a breakout of the doji sandwich. There's your J hook. You just stay long. Oh, the option spread. Yeah, and there would be a lot of times where if they're asking $3 and they're bidding $3 and asking $3.80, I put it in at $3.40, and more often than not, I'll get hit because the bid-ask spread is for the money maker or market makers, the money makers. Because if you want to buy that option, you're going to pay $3.80 for it. If you have to sell that option, you're only going to get $3 for it. So you put your bid in or ask in at the halfway point, because essentially what that's done to the market maker is you just cut his potential profits in half, based on that if somebody has to sell it to you or they really want to get out of that trade, the market maker is going to give it to them at $3. If they really want into that trade, just scrambling after it as fast as they can, they may pay $3.80. So when you put your bid or asking at $3.40, you've just now cut his potential profit in half. He'll probably hit you just to get you out of there so he can get the spread back again. Okay, with that, Jim, go ahead and do the double line. And in 2.8 seconds, do the second double line. Okay. I'm doing all this with one eye, so I can probably type just as well as you normally do. VIMC, nothing here. You just stay short. Again, there's your big left-right combo after 3 dojis. Close below the T-line. Right now, all you can do is stay short until you see a close back above the T-line. And NVIV, a shooting star today. Should I close? Whoops. What did I do? NVIV. You would close if it opens lower tomorrow. More than likely, it'll bring it back down to the T-line. So if I saw this, if I own this and I saw it open lower tomorrow, I'd close out the position immediately, anticipating it's going to come back because the profit taking has started. It's going to come back and test the T-line. On the other hand, if it opens lower and then turns right around and heads back up, tells me they aren't selling it off, I can always buy it back very quickly. GPN, nothing real exciting here, but as long as it stays above the T-line, you can stay long. AMCX, ever since your little belt hold type signal off the 50, you stay long on this one. Anticipating your next target is the top of this channel, somewhere up in this area. As soon as it got up there, then I'd watch again real closely to see what it does at that level. Save. That's a good looking chart if it opens positive tomorrow. Notice when it consolidated today, it came right back and used the T-line as support. And American, this one you can still buy. Just watch to see what it does once it gets to the moving averages, because that's going to coincide with this downtrending channel. And PBR, you stay long as it stays above the T-line. So obviously you want to see it trade positive tomorrow. If it opens lower, that's pretty much telling you that, again, the 200 is acting as a resistance. Now they're heading back to a support level. It in it, but seems to be going sideways. Don't know how long. Should I close and put money elsewhere? It's not really going sideways. It's just doing that little, as long as this stays above the T-line, I'd stay with it. TMV, kicker type signal. This is the 20-year bear, so as long as this keeps going up, which means the bond prices are going down, you stay long. Array, another fry pan bottom right here on the 50, which makes it very simple. If it opens positive tomorrow, you can be buying. Then you just want to see and make sure it gets through the 200, because then your next target is going to be up here to fill this gap. So the fact that you're in a fry pan bottom gives you a little bit extra positioning, in the sense that the fry pan bottom is usually going to act pretty strong even if the market is soggy. W-Wave, another one where you just stay long on this fry pan bottom, especially if this opens positive tomorrow, breaking into new high territory. So we can make this. And you can see it's in an upward trend channel. T2, nothing here yet. I wouldn't be in this one. That's moving sideways. I'd rather pay $28.80 for it, knowing that it broke out to the upside. AAN, nice fry pan bottom. You stay with this one. Halo, you stay long on this one. That slow curve. And OVAS, I've still got some of the 40s. I'm giving it one more day. Now, it didn't do this type. It was more of a doji type day on the other charts. But I'll give this one more day, which means it has to open positive tomorrow to stay in it. CEMP, another one that you watch to see what it does once it gets to the resistance level, which is almost there. If it fails, it means it's still moving sideways. You close it right back out. SNSS, there's your fry pan bottom, breaking out through the 200 and the beginning of this pattern. You stay long until you see a sell signal. Curve, J-hook pattern setting up. You have a little left-right combo today. Off, supporting right here at the 50. Next target should be then the 200-day moving average. And Netflix, as long as this stays above the T-line, you stay with it. Baidu did a strong bearish engulfing signal in the overbought condition. It has to stay above the T-line. It's just this one, even though it's slowly moving up, it's slow enough to make the risk-reward factor questionable. If I own this one right now, I'd have my sell stop right below the T-line, because if it came back down through there, that means they're confirming the bearish engulfing signal. So how strong is today's bearish? Well, that's what you'll find out tomorrow. See how they open it. Delta. Delta, you stay long, but just watch to see what it does once it gets to these moving averages. I closed out my calls on B and FT. I can always reposition if it opens positive and does a J-hook type pattern. But I didn't want to take the risk of it opening lower tomorrow. That would tell me they're coming back pretty strong. And QIHU, another one where you just stay long as it stays above the T line. Wix. Wix, nothing real exciting yet. Might be in this low fry pan bottom type trade. I would rather put a buy stop right up here. But if it got up through there, we know we're starting in the next wave. But that could take quite a few days, weeks. MITK, that's a nice J-hook pattern. That one you can be buying on positive trading. Just make sure the volume is good. I think it's always good on this one. AGN. You do have the cup in hand or the fry pan bottom set up. If you like it, you stay long. I wouldn't really get active on it until it broke through that downtrending channel. AXN, nice J-hook. There's your best friend. Doji gap up right off the 50. That one I'd be a buyer of on positive trading tomorrow. Put a little star next to that one. That $2.25, it's just like buying an option without having to worry about the expiration. CHRS was one that we were paying attention to today. There's another J-hook pattern. Notice that it's broken this downtrending channel. You stay long on this one. Court, hold back, but didn't do anything devastating, because that's really not a signal. It was almost a shooting star, but not quite, because it wasn't quite 2 times greater than the body. The tail wasn't quite 2 times greater than the body. I'd still be buying this one on positive trading tomorrow, because that would tell me the profit taking's over. So that's not a signal compared to something like this, EGNX. That is a shooting star signal with stochastics rolling over. So if you didn't get out today, you definitely get out on any lower trading tomorrow. WABA. Should be out of this one. Could be short this one still. And Kraft. Kraft, that's a good looking chart. They weren't being bought out by Heinz, were they? BP, you can start buying this one. I'd buy this one if it came up through the 50. That would tell me the downtrending channel is bearish. Macy's, you just stay long on this one as long as it stays above the T line. Caterpillar. Caterpillar, you can get ready to buy this one on positive trading tomorrow, breaking through that downtrending channel. Boeing, you can buy this one on positive trading. You've got a resistance level right up here, which is probably your next target. VA, you can be buying this one on positive trading also in the cradle type pattern. And Twitter was trying to do a scoop pattern. You can buy this one if it comes back up through today's open. That would tell you the scoop type pattern is still in progress. But Twitter really hasn't had anything real impressive here in the last few months. I'd still be trading something else. QSR, That one you can be buying. Just remember, you're not going to get that one's more of an institutional type trader. Not a whole lot of volatility in it. Monsanto, same scenario. Probably not even a strong enough signal to really get ready to buy this one. Remember, Monsanto, well, you still need a strong signal to get out of this area. Vanguard, just stay long. Live. There's your long-legged doji. Notice that they still supported. If I was going to buy this, I'd put a buy stop above today's open. If it comes up through there, this gap up is still in progress. SSNI, you stay long on this one. Bonton, you can be buying this one on positive trading. I've always liked to trade this stock because notice once it gets above the T-line, you get a pretty steady move until you see a sell signal. Pretty steady move until you see a buy signal. We did AXN. We did our EGN. That's a good fry pan bottom. I wouldn't be afraid to buy this one on positive trading tomorrow. ARRY. There's your scoop pattern. Wouldn't be afraid to be buying this one on positive trading tomorrow. NKTR. KTR. Another little scoop type pattern. Anticipate right now, I probably wouldn't be buying it here, but anticipate that if you own it, it's coming back up to test the 200-day moving average. LCI, stay long on this one. I wouldn't necessarily be buying here unless you saw a gap up. Then I'd be look for that the breakout. PBR, you can buy this one on strength. It needs to get up through the 200. You can see the 50 and the T-line are acting as support on this one. VRX, nothing real exciting here, but if it gets back up above the T-line, you just stay long until you see a sell signal and a close back below the T-line. That was VRX. We did it. American. ZIV. Another one where you just stay long. Loco. Loco failed. This is a perfect example of you buy on positive trading, but it shouldn't close back below the T-line. Close it out. This one is not working. And Zixi, you stay long, but if it opened lower tomorrow, I'd probably close it out because that would be pretty much telling me that this resistance level up here is still acting as resistance. If I was buying, if it came up through this level, I'd start buying immediately. And VDSI, just stay long. You've had a gap up doji, I'd probably use today's low as my stop. Whiting, along with the other ones, are still in this big sideways mode. On a short-term basis, you shouldn't be in it. On a long-term basis, if it breaks through this downtrending channel, then you can start buying. Cena, stay short. You stay short, but be careful of the 50. It might be acting as support, so that you have to see what type of trading they do at that level. Target, you stay long. It's almost in a breakout mode also, where if it opened positive, breaking out through this, kind of on a doji sandwich setup. Slumberger, stay short. You can see that it broke the support level. You stay short until you see a buy signal. G-Pro, is that the reason the ambush sold off hard? G-Pro's got a bearish doji sandwich. I would suspect it's coming back to the 50. CLVS, you can pretty much stay long on this one. You're just going to go back to the top of the trend channel. HEI, you got to watch to see what it does right here. I mean, you're right there. You can be buying. Just watch to see what it does at that resistance level. STC, nice J-hook pattern. Stay long. MWW, you can get ready to buy this one. It's right at the breakout level. That's where you want to be buying. You got this little slow curve. Want to see it break out. Same scenario on Amazon. If Amazon breaks out through this level, you want to be buying. That could start strong wave 3. Exoma did break out. This is what happens when they break out. Everybody sees that the resistance level is not acting as resistance. So in this case, with kind of a doji sandwich setup, when it gapped open, you want to be a buyer immediately because the probabilities are that they gapped it through the resistance level, meaning they're wanting in there with great enthusiasm. Oh, that was Exoma that we started with. Priceline, still in a downtrend. If you were short, you stay short. You shouldn't be buying this one yet. So you see a buy signal. Ford, trying to break through that downtrending channel. On a trade basis, you still want to see it get up through that level. On a long-term basis, I'd be buying if it came back up through the 50. Coors, it's big enough where we can see it. And you got kind of a double bottom. This one you can buy on positive trading with the eventual target up here at the 200-day or at the 50-day moving average. Sometimes the market maker is fishing for a price when there is a wide spread. I sometimes put a bid less than the half fishing price. A bid less than half fishing for a lower price. Yeah, I usually go in right around the halfway point. Maybe 5 cents one way or the other just to get a little bit. Because if I'm buying something, I'm buying it based on that at somewhere in that price on the options. If that stock price moves the way it should, the bid-ask spread won't be as important, but becomes less important, obviously, if you're buying at the halfway point. Sonic, just stay long on this one. Good evening, Vladimir. See, did we do MX? MX, you want to be buying this one on positive trading tomorrow. Telling you the next target after supporting here on the T-line would more than likely be the 200-day moving average. You could be buying this one, but I'd be more apt to buy it just as it breaks out through this level, the top of these levels. Oh, that's true. Yeah, Bont is never really a big volume trader, so it is a little bit light on the volume. So you have to take that into consideration. So you definitely don't want to go in for 5,000 shares because you'll be buying a good percentage of the volume for that day, or good sized percentage. VLTC, still watching this one. The next buy signal tells us that this little wedge is being broken. NVIV, this one with the gap up today in the doji has to open positive to stay in it. If it opens lower, they're going to bring it back to test the T-line. You want to come out of it, and you can always get back in. FXCM, at this point at the little bobble, I wouldn't buy it until it does come back up through the 50-day moving average. And AXD or ADXS still has to get back up above the T line to get back in it. Okay, guess we got them all. Just another reminder, if you've got questions about coming to the lake, somebody was asking whether they could bring their spouses or things for them to do. There's plenty of stuff. There's interesting little shops in Penn Yan. The wineries, the spouses are all invited to go to lunch and dinner with us and breakfast, since we eat breakfast right there at the house. So, and I've mentioned before that a lot of people, if they can drive, they'll come up a couple of days before or stay a couple of days afterwards and drive around the area. It's just very pretty countryside, lots of interesting spots up there to take a look at. So with that, we'll see everybody bright in the morning, or bright and early in the morning. We'll see you then.